Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Apple. Specifically, Apple released their Q2 2023 earnings. Market seems to like what it's seeing. As of Friday, the stock was up almost 5% as of closing, and we're kind of getting close to all-time highs in the Apple stock here. Now today what we're going to talk about is we're going to quickly go through some of their top line items, different segments. We're going to go through some things that I gleaned from the conference call. And then we're going to go a little bit more in depth into the earnings. And then I'm going to give you my opinion on why the stock is responding the way it is, whether I think it was a great quarter. So the top line item, revenue, came in at $94.84 billion. Estimate was $92.6 billion. So that's a pretty significant beat there. Maybe one of the reasons why the stock is up. Of course, expectations have been going down quite a bit with rising interest rates, things that are going on in the macro environment, things like that. EPS was $1.52 versus $1.43, so nice little beat there as well. And cash pile is $166.33 billion. Of course, they like to be net cash neutral. They do have some debt now, so I can't remember exactly what net cash is. It's still positive, but they want to be net cash neutral, but still a significant chunk of change in cash. Now, this is where things are a bit surprising, but one of the reasons why I think the stock is actually doing quite well. iPhone revenue is $51.33 billion. The estimate was $48.97 billion. And if you recall a lot of my older videos, it just seems like the analyst community, the market as a whole is always focused on the iPhone. You know, the iPhone I think is always going to be an integral part of Apple's business. However, there's so many other growing segments that are very, very attractive. Regardless, that was up 2% year over year in these kind of environments, and that's kind of like their creme jewel sort of thing, so to speak. So I think that's one of the main reasons that we've seen that. We'll get into why that's up, some different things on that as well. This is where we see a little bit of weakness. iPad revenue was $6.67 billion versus $6.69. Slight miss there. It's down 13% year over year. They said that's due to difficult compares because they had the M2 chip going into their iPads. So there hasn't been a lot of updates. Similarly with Mac, that's been something that I think analysts have not been getting it right. Mac revenue was $7.17 billion, still very respectable. But the estimate was $7.74 billion. That's down 31% year over year. Of course, this is due to the difficult compare because we see those M1s that came out, M1 Ultra. These chips were insane. I've mentioned this before. They came out with their M2, which are great, but nowhere near the performance boost that we saw going from Intel chips to their own integrated chips themselves. So that's why you're going to see that weakness. And I think we'll continue to see that weakness until we see maybe the iMac 27-inch that they come out with it, the more pro version stuff coming out. So that's been a thing that kind of has been hitting them lately. Services revenue was $20.91 billion versus an estimate of $21.11 billion. So the estimate was, it was a pretty big miss there, which would be negative for the stock, but that's still up 5% year over year. And this was actually, for services, a quarterly record. And like I've always said, this is they have such a massive install base now that this is going to be a huge revenue driver for them. And I think maybe analysts just got a little bit ahead of themselves on that one. Wearables, home and accessories, $8.76 billion. The estimate was $8.51 billion. So it was a slight miss there, and that's down 1% year over year. So it's pretty stable there. So like I said, all-time record for services. So that's not something to be negative as far as I'm concerned. It's still over $20 billion. And we're going to talk about their guidance, what they figure going forward on that. Again, why is the stock up so much? So this was a quarterly record for the iPhone, and it was mainly due to emerging markets. We'll get a little bit into that in the financials. You can see why. But a quarterly record in this environment. So I think that's why the stock's responding the way it is that, it's a super challenging time. Apple, I believe, is like the only tech company that hasn't laid off a ton of workers. So this is kind of reflecting their conservative approach, and the conservative approach has actually worked. Before, the market was rewarding companies, with a higher multiple that were hiring like crazy, that were expanding like crazy. Apple's always been more conservative, and it seems to be benefiting them in this environment. And I think that's why the stock is going up. Revenue, although it was a beat, it was down 3% year over year. But they keep talking about a constant currency basis. If you went in a constant currency basis, because this foreign exchange is really hurting them, it actually grew in most of their segments, so that's something to take into account. Again, we talked about the Mac here. It was a difficult compare due to the M1 chip and of course foreign exchange as well. So they keep talking about that. They talked about that again on the last quarter as well. And this is huge. I think maybe this is another reason why the stock is up so much. First two Apple stores opened in India. Just opened in India. I believe it was last quarter. Within the last quarter, they opened up. Tim Cook was talking about Tim Apple. This is the second most populated country on the planet, right? They're shifting a lot of their manufacturing over there, of course, to diversify their supply chain, especially with all the stuff that's happened with China. But perhaps that's something that the market is picking up on as well. That's going to positively affect the earnings, in my opinion. Board of Directors also authorized another $90 billion additional share repurchases, and the dividends went up by 4%. And they expect that to increase yearly. So again, dividends going up as well. In this environment, another 2 thumbs up. When they talk about guidance year over year for the next quarter, they expect it to be similar to this quarter. So it was a good quarter. So that's probably why the stock is acting the way it is. Foreign exchange is still a headwind. With the strong dollar, we're probably going to see that for quite some time. But it hasn't seemed to be affecting the company too badly, maybe just in terms of analyst estimates. And services are going to be kind of in line with the March quarter growth. So we're going to continue seeing that be good going forward. Right now, let's take a look into their financials. There's a couple little things here, not too much, but we're going to go through it real quick. So first things first, let's take a look at their income statement here. So we've got the year over year. So you can kind of see here rather this year over year change here. In products, we can see this around 3% drop. $73.9 billion this quarter. It was $77.4 billion a year ago. Of course, services increased slightly as well there. So our total net sales were down from $97 billion to almost $95 billion. But the one thing that is admirable, they seem to have really kept their costs in line. The gross margin really hasn't changed that much year over year, 41.9, almost 42 versus 42.55 billion a year ago. I always talk about the research and development. Again, I love to see that. Are we going to see the AR? We're going to see VR. I think that we're going to be talking about getting actually a VR set potentially. Tell me if I'm wrong in the comments. I haven't been following this too closely. Potentially in WWDC, we'll see. So it was 7.45 billion versus 6.3 billion. Nice. They're spending a lot on research and development. Net income was $24.16 billion versus $25 billion a year ago. So not too much difference. And then the diluted EPS was actually in line, basically, $1.52 this quarter. This 3 months ended this quarter this year versus 1.52 a year ago. Net sales by reportable segment. So this is where you can see a little bit of the weakness. Americas, the net sales were down slightly, 37.7 billion versus 40 billion a year ago. Europe was actually a little bit better, $23.945 billion versus $23.287 billion a year ago. Greater China has actually dropped a little bit, 17.8 billion versus 18.3 billion. Japan actually has dropped quite considerably, 7.1 billion versus 7.7 billion a year ago. And then we see here the rest of the Asia Pacific, and this is what I talked about emerging markets, some of the emerging markets being strong. That's a huge increase, 8.11 billion versus 7 billion roughly a year ago. So that's where we see our total net sales at the bottom. In terms of the net sales by the category, again, here's the iPhone, 0.33 billion versus 50.5 billion. It's a nice little beat there. Of course, the Mac, we've seen that drop that I talked about, 7.16 billion versus 10.4 billion a year ago. iPads dropped as well, 6.6 billion versus 7.6 billion a year ago. Wearables, kind of in line, close, dropped slightly a bit. And of course, we've seen that services grow to almost $21 billion. So big increase there. So, there is some room to grow. But of course, like I said, it's like the market likes to focus on the iPhone, right? In terms of the balance sheet here, again, cash equivalents, marketable securities, both short and long term gives you about $166 billion in cash. Their liabilities and that is all pretty in line. I don't think many people are too interested in that. And another little thing I like to talk about, the statement of cash flows here there wasn't anything too significant on it really. But I like to look at the purchases of marketable securities were actually down pretty huge. So, I'm always trying to read things into this. What does this mean for the market going forward? Take that for what you will. And again, of course, the proceeds from the sales of market securities, they didn't sell. So it looks like they didn't buy as much, but they didn't sell as much. So to me, that makes me think they're having quite a conservative approach going forward. So overall, I think it was a great quarter. It was a little unexpected. Like, it's kind of a quarter where it's a not too exciting quarter. However, it is slightly exciting given all the stuff that's going on in the market right now. And to see them outperform iPhone revenue like that, it's interesting. So for me, it's going to be very interesting to see what Apple comes up with WWDC this year, and to see what's going to happen with the Fed tightening interest rates, things like that. But Apple has actually stood out as being pretty strong and being a huge portion of my portfolio. I'm obviously happy with it. We'll hold it. We'll see what's going on forward there. Love to know what you guys think, though. Leave a comment down below. Don't forget to like and subscribe. And that's going to be it for today, and I'll see you in the next one.